Bitcoin is about to bounce. The only question is whether it saves the bull run or kills it. And the truth is, most people are misreading what it actually means. That's why today I'll walk you through how this next bounce compares to the previous years, with the 20-week and the 50-week simple moving averages when they converge right after the first breakdown into the bear market, into the downtrend. This is a key level that we need to really watch and see if Bitcoin makes a rejection from this level, or if it can actually cleanly break above it and stay above it. Then that could potentially mean that this bear market is going to be much more short-lived. So that's why this bounce could really define the next 12 months of the market. I want to take today's analysis in three ways. So typically there are three ways that people analyze Bitcoin price. Number one is just purely by counting the number of days and looking at the price fluctuations from the moving averages, the 20-week, 50-week, and sometimes even the 100-week simple moving average, and pointing out, okay, are we in a bull market based on how long it has been going on, and which months that the Bitcoin price tends to top out at, and also how does it compare to the moving averages? Are we above it, below it? How much above it are we? How much below it are we? So that's the first way. The second way is fundamental analysis, aka comparing Bitcoin's utility, which is mainly for debasement, for anti-inflation, for store of value. And so obviously we compare it to the M2 money supply, we compare it to gold, which has been heavily correlated with Bitcoin, and we compare it to the S&P, the stock market indices, which also have been heavily correlated with Bitcoin. So that's number two. And number three way is with technical analysis, looking at price trends, looking at support and resistances, higher highs and higher lows to determine whether Bitcoin's price action is in an uptrend, sideways trend, or downtrend. So these three ways, we're going to look at it all together, and I'll show you why no matter how you look at it, no matter which camp of analysis you believe, all of them are pointing to two things. Number one, Bitcoin is at a very good price to be buying at right now at 89,000, right as we speak, 89,360. Based on all three of these types of camps of analysis, Bitcoin is at a good value to be buying. However, once we get back towards that 100K to 102K mark, there's a big resistance. And the question then becomes, how soon do we get to this resistance in a bounce? And what will Bitcoin do when it revisits that level? So that's the agenda for today. I want to take all three approaches, and I want to take these two price levels, current price versus the bounce target of around 100, 102K, and give you a whole picture of how I'm looking at Bitcoin as a medium-term position going into the next 1 to 6 months. Okay, let's get started. So first, let's look at the current price. So Bitcoin is currently at $89,300. And the first way to look at it is with the cycle analysis. So typically, counting the number of days, number of months, from the top to the bottom, usually Bitcoin downtrend or bear markets, whatever you want to call it, lasts about 12 months. This is the longest it has typically lasted. So that will take us from October 2025 to October 2026. Now, comparing cycle analysis, we have to also consider the moving average prices, because this cycle, we haven't seen Bitcoin reach as high of a euphoric price before it broke down below the 50-week bull market support, 50-week simple moving average. So that's why, considering all things, because Bitcoin has been around this 100K mark for the majority of 2025, there has been so much consolidation that the lower end moving averages have been trending up. Even the 200-week simple moving average has been trending up. So this is why, no matter how you look at it, okay, we are very unlikely to see a much bigger drawdown from current prices compared to last cycles, Because in the last cycles, let's say in 2021, the 50-week simple moving average from the 200-week simple moving average, these two levels had a big difference of around 50% more drawdown. And then back here in 2018, this was even more dramatic. So by the first week that Bitcoin broke below the 50-week SMA, the 200-week SMA was at 2.5K, whereas the 50-week was at 8K. So that was another, what is this, difference-wise, 68% drawdown. So we're not going to get this level of drawdown below this 50-week simple moving average, because even if we go down to the 200-week right now, okay, that's 44% below the 50-week and 36% below the current price. Now, mind you, also because we have had such consolidation and the 200-week will continue to trend up. So most analysts agree that because this cycle has not had a euphoric top, chances are we're not going to have a very dramatic crash, 70 to 80% crash. What's much more likely is for us to either bottom in the 80Ks or maybe drop into the 70Ks. Worst case scenario, something in these ranges. I haven't seen anyone calling for lower than these ranges, let's say below 57 to 60K, because that would effectively mean that Bitcoin needs to drop below the 200-week SMA within the first 2 to 3 months of the bear market starting. And that had, like, from the top to the bottom happening within 3 months, that has never happened before. That would seriously mean that someone like Binance itself went down or something. That can maybe cause that to happen. Okay, so that's the first way to look at it. Cycle analysis wise, we're at a good price. The second way to look at it is fundamental analysis. So looking at the M2 money supply, looking at gold price, S&P. And this is the most interesting way because all three of these typical leading indicators of Bitcoin price are at all-time highs. So gold just made a new all-time high today. S&P is touching new all-time high today. All the other precious metals are going into all-time high price discovery, and you have the M2 money supply right here, taking into account all of the global M2 money supply. Also very interesting. Okay, you can compare Bitcoin's price action over the last 2 years with that of gold price action and the price action of the S&P, and the two are both pairs are very heavily correlated. So that's down here. You have the performance of Bitcoin, and then you have the performance of the S&P. And here you have a 52-week rolling average, rolling correlation. So basically 1 year correlation of Bitcoin versus the S&P. And you see the two are very heavily correlated since May of 2022. And you can see that on the chart here. Not only are they both going up, but the bottoms, the peaks and troughs, are very similar, near similar prices. So why are the two getting decoupled right now? Okay, here's Bitcoin, here's the S&P. So very similar. Before we answer the question of why they're being decoupled right now, you can look at the same thing on gold with a 10-week lead. So typically gold leads the price of Bitcoin. So this is a 10-week lead mapped on top of Bitcoin. And you see up until this right here, I'm going to change this correlation to be related to calculated with gold. And you see Bitcoin with gold correlation has been very high since November 2022. And peaks and troughs, very similar as well. Okay, peaks here, troughs here, trough here, trough here. So why are the two heavily, suddenly discorrelated right now? That's because something seriously broke in crypto on October 10th. This is getting more and more obvious as the days go on. So really, what drives Bitcoin right now? It's debasement, it's anti-inflation. As the M2 money supply goes up, as we can see right here, this drives all of the blue chip assets that are anti-debasement, namely gold, S&P, and Bitcoin all together. Whenever you have inflation, large amounts of money printing, as we see in the M2 money supply going up, people go into these three types of blue chip assets: gold, S&P, equity indices, or Bitcoin. And that's why you see every time M2 money supply bottoms, Bitcoin bottoms, and then tops together, troughs together, around the same time, goes up together. But these two also start to get heavily discorrelated right around here, the first and second week of October. And this exact moment was October 10th, the big market crash. So what I'm getting at here is, if Bitcoin is to get through this manipulative period, okay, I'm not here to, definitively tell you what happened on October 10th. I don't know. Okay, I think there are very few people who actually know, but we can pretty easily see the effects of what happened on that day. So just look it up on ChatGPT or Grok. That is going to give you the clearest summary. So most people, if you haven't followed crypto enough, you wouldn't have felt October 10th as strongly. But to put it in perspective, on that day, we have had truly unprecedented levels of single candle move that's bigger than every single candle move ever by a huge margin. So outside of Bitcoin and Ethereum, every single altcoin went down 50 to like 95% in the matter of like 1 hour. XRP went down, for example, 70% in 1 hour. This has never happened before. And although they have been recovered very quickly, of course, because this crash was so unreasonable, in comparison, this single candle crash was 19 times larger than COVID and 12 times larger than the FTX crash. So there's no way to explain it other than some core functions of exchange and one, if not a few of the largest market makers got seriously hurt. And this triggered the October 10th crash. So the aftermath of that would be forced selling in Bitcoin to cover their exchange losses as they have to repay each other, whether that is the market makers having to sell and recoup, or if the exchanges need to sell their Bitcoin holdings to pay back the market makers. Not here to speculate on that, but as this applies to the price of Bitcoin, if we assume that October 10th started a forced selling, then that will eventually lead to a bottom, a local bottom, and for price to reverse. And that would be able to perfectly explain why Bitcoin all of a sudden started to be decorrelated with everything that it has been correlated with for the last 2 years. That's the most logical way to explain it. So this fundamental angle is what I like the most. And so coming back to the Bitcoin chart, I think the clearest comparison with this October 10th crash would be the 2022 manipulated crashes, namely the Luna crash and the FTX crash. So the Luna crash happened on May 9th, 2022. And with all the unwinding that happened in the 6 months after, which led to the FTX crash finally in November 7th, 2022. So this was right around 6 months of a time frame. If we take that time frame and then we look at, okay, October 10th, this first event happened, and then a bunch of things happen behind the scenes. People sue each other, some bankruptcies happen, and stuff eventually floats towards the surface. 6 months later, let's say we get to April of 2026, truly the capitulation happens and then price bottoms. That would be fine. And that would be a typical, bear market fashion, where within this 1 year period from the top to the bottom, Bitcoin bottoms. So that's the fundamental angle. And if you consider that, I would say current price, we are getting quite close to a bottom. The way I like to think about it is, you look at the FTX crash. Everyone thinks that the FTX crash was the biggest thing ever, but look at what happened on Bitcoin price during that week. So November 7th, the week of the FTX crash, brought Bitcoin down from 20K to 16K. But 16K was the actual bottom of Bitcoin's price in November 2022. And this was basically 1 week. So by the time that the capitulation event happens, it's done. All the forced selling have been completed. So by the time we get this news, that pretty much means we already would be at the bottom. So the only thing we really need to watch is, do we get any sort of bounce? If we get a bounce, then this cycle will be much more similar to the 2019, let's say, bear market rally, which included the September 2019 repo crisis and subsequently the COVID crash. So as long as we can get bounces in this period, that's going to really soften the eventual blow of the aftermath of the 1010 crash, which I believe will happen within the next, from today, that's 4 to 5 months. If we don't get any bounce at all, then that could lead to something like this. But as long as we don't see continued, forced selling, we are fine. So that's going to carry on to our next point, which is we do need to see a bounce in order to really soften the forced selling that we need to see before the bottom comes into play. Okay, finally, looking at technical analysis comparing to the current price of Bitcoin. This is very simple. So what do technical analysts like to look at? Price action, okay, support and resistance levels. And the levels on Bitcoin are actually very clear right now. So we have higher highs and higher lows. We have these highs and low, higher high, higher low. Technically, this was a higher high. And if we are to get a bounce here, then this would be another higher low above this previous higher low at 74 to 76K, because the bottom of this wick was still at 80K. So if we get this bounce, that's going to be very good for a technical analysis perspective, because that will be the first sign of a continuation of the uptrend, because we have a higher low. Then the question becomes, okay, does this bounce lead to a new high above the previous higher high at 125K? Or is it going to roll over into a lower high, in which case then the uptrend becomes a sideways trend? So when we are in an uptrend, we need to see continuous higher highs and higher lows. When the uptrend breaks, it can either break into a downtrend if, for example, we get a lower high like this, then that's the break of an uptrend into a downtrend, or it can go into a sideways chop period where a higher low is formed, but then we have a lower high like this. Then perhaps it compresses into another higher low, into another lower high, and these kind of triangle flag patterns can form. So that's why, from a technical analysis perspective, the next bounce towards especially the 50-week SMA is going to be very crucial. Okay, where was I? So looking at price action purely, buying here at 89K is very good. Why? Because you have a very clear stop loss at 77K. If you just follow trend theory, you want to see higher highs and higher lows. So as long as 76K, 77K holds, you buy at 89K, you have a stop loss right here. If this level gets broken, you sell because you know that the uptrend would be clearly broken. Not only is it not an uptrend, it's also not a sideways trend, because if we get below 77K in the next 1 month, then that's a new downtrend. And for sure, by that point, you want to sell your Bitcoin, at least not have a very big long exposure. So that's very, very simple from a chart analysis perspective. And I'm not even saying this is likely to happen. All I'm saying is from current level to this stop loss level, according to technical analysis, it's a very small margin of potential loss there. And that's why it's a good level to be buying. Okay, next, let's look at the bounce target. So the current bounce target I have is basically right here between 101K to 104K. And by the time we get there, it's probably not going to be 104. It'll be like 102, because this light blue line, that's the 20-week simple moving average. And these two moving averages are going to converge. So why do we look at both of these moving averages? And let's go back to the 3 ways of analyzing Bitcoin price again. If we look at cycle analysis based on previous cycles, the 20-week simple moving average is also significant, because up until mid-cycle of 2021, basically right here, most people still agreed, including myself, that the 20-week simple moving average was the bull market support for Bitcoin, because historically, Bitcoin has not dropped as much until the 50-week simple moving average and be able to recover into a new uptrend rally. But this was the first time that it happened in August of 2021, right here. So that's why we also need to take into account the 20-week SMA to look at the 2018 cycle, 2019 cycle, and then, or 2019, let's say uptrend, not exactly a bull run, and then the older cycles like 2014. So considering all previous cycles, when the 20-week simple moving average and the 50 simple moving average converges, what happens? This is typically the period where a bounce is expected. Very simply put, you can look at charts back in history. So right here, from December 2021, when Bitcoin broke below the 50-week SMA, until the bounce, look at what happened. The 20-week crossed over the 50-week and crossed below it. So this was crucial because while the 20-week simple moving average was above the 50-week, this meant that all of this area in between these two moving averages, these are the bull market support levels. So while the 20-week is still above the 50-week, as long as price can trade back above the 50-week, you could argue, you could say that Bitcoin has reclaimed the bull market support. But once the 50-week trades above the 20-week, like all of this, the reverse happens, because now there are two moving averages that need to be reclaimed before you can say that it's in the bull market again, and the uptrend is reestablished. So if we are to reclaim this bull run and basically make a V-shaped recovery, this first bounce is very crucial, looking at the moving averages. If Bitcoin price revisits the 50-week and the 20-week together but gets rejected, it'll be very similar to the March 2022 bear market rally and subsequent rejection. And then that will lead to a long period where there are two moving averages that act as resistance. Okay, so that's like right here when these two moving averages converge. Okay, and we get a bounce towards right here. If we get a rejection, then what happens is the 20-week is going to trend lower faster, and the 50-week is going to remain high, and thus we have a larger amount of resistance compared to basically all previous cycles. And where was I? Yeah, so that's based on cycle analysis. We really want this first bounce to be significant. And I think a very good contrast here is the 2022 bounce right here, where we got a rejection, compared with the 2019 bounce in all of this. So the reason why 2019 was very interesting is because from around the period of September 2019, right here, we had a similar repo crisis like what we had right now in September and October 2025. And then also the Fed just started to reintroduce QE right around that same period in October 2019. And then by March, right after COVID, everyone knows the money printer got turned back on in a big way, and QE really started to go into infinity. So the reason why this is interesting is because during this period, first, Bitcoin was correcting, and then by 2019 standards, going below the 20-week SMA was already quite bad. And then it had a very significant bounce while the 20-week and the 50-week were converged altogether right here in February of 2020. Okay, and this bounce was pretty big. It got above both of these moving averages. So that was a good padding. It stayed above that period, which led to us remaining around this level. And even with the big COVID crash, the moving averages really were just crisscrossing in between each other. We have the 20-week SMA and the 50-week SMA pretty much going in tandem. And then Bitcoin price kind of riding that. You see, chopping sometimes in between, sometimes above, sometimes below. Here again, below, here again, above. So if we can get this kind of price action, which doesn't even need to resolve itself anytime, soon. Remember, this chop period was from November 2019 up until July 2020. So this was 8 months of chop. So even if we get 8 months of chop like this, where the price action fluctuates above and below the 20-week and the 50-week SMA, that's going to be much better than this kind of a price action where it's a clear rejection after the bounce. So if that happens, that's more than enough to say that, okay, this is going to be a much more subdued bear market and prices are not going to head much lower. Because what that will look like is, okay, the 50-week and the 20-week will kind of crisscross like this. And then you have the price action. Let's say we like this. So the black line, imagine that's the Bitcoin price. Even if it just does this, it goes back to 100K. It doesn't break above it clearly, but it doesn't drop all the way down below 84K. And it just remains there. That will be more than enough to emulate something that happened in 2019, like back here. And that can last a very long time. The longer it lasts in that period, the better for the bulls. Because while that's happening, the moving averages are going to coil up. Not only will the 20-week and the 50-week not break down, but also the 100-week SMA and the 200-week SMA are going to go up because price will be trading higher than these longer-term moving averages. So looking at 2019, that's like this. While Bitcoin is chopping in this period, around the 20-week and the 50-week, you see the 200-week down here was already going up, and the 100-week was going up. And by August of 2020, the absolute bottom support for Bitcoin already got way higher. So that's a scenario I really want to see based on cycle analysis on this next bounce. Of course, the bounce needs to happen first, which I believe it should happen soon because we're getting there. We're getting that compression of the 20-week and 50-week. Once that happens, we don't want to see a rejection like this in price. What we want to see is it come up here, either for it to break above it, like this. That would be the best case scenario, like this. Or if it doesn't, then maybe it chops like this. As long as it holds above here, that would be really good. So that's the cycle analysis way to look at the next bounce and just purely look at price action for Bitcoin. So we have already established earlier the current uptrend in Bitcoin. And the recent low at 80K, that's still a higher low than the last low at 76, 77K range. So for a technical analyst, what do they look at? They look at higher highs and higher lows. If we know that, and if we believe that a bounce is coming towards the 100K mark, right around there, what's going to happen? We get there over the next at least 3 to 4 weeks, because when you look at how long this drawdown has taken, it took us 4 weeks to go from 114K to 80K. And from the 50-week, it took us 2 weeks. So at least there will be 2 weeks if we start bouncing right away. I'm not confident enough to make that call. I think at least 3 to 4 weeks, even in the most bullish scenario, that's going to be the time frame it takes for us to get to these bounce levels. So that would mean a few candles like this, okay? Like that. Let's say 3 more weeks. If we get there, then the chart will look like a clear higher low from a TA perspective, because this is a weekly chart and you can clearly see a new trough being formed. Once we get there, the question will be very clear. If this continues with multiple candles and it breaks above the 124K mark all the way up like this, that would be really good, because that would be a clear, like, full reversal of this entire drawdown. And not only do we have a higher low, but we also have a higher high like this. That's the most bullish scenario. Again, I'm not even expecting this. But just in case this happens, that would be wonderful. I think what's more likely is for the 100K mark to act as resistance and for us to either, peak above it, but then roll over like this, and then showing a lower high like this. So that would combine a higher low, lower high, which would mean that the uptrend is broken, but then we don't also have a downtrend. Instead, we have a sideways trend like this, where Bitcoin's price will compress around the 20-week and the 50-week SMA, forming whatever you want to call this, like a bull flag, pendant, consolidation, chop, sideways market, whatever. They're all the same thing. This is my expected case. If this happens, then we have this kind of a pattern on our hands. So then we need to watch, okay, once a new lower high is formed and the higher low is formed, do we make another higher low and do we make another lower high, higher low, lower high? And eventually, does it break towards the upside like this? Or does it break towards the downside like this? Okay, that's the next question following that we need to answer. And also, the case we want to avoid from a TA perspective is like this. So let's say we get to the 100K mark. First of all, we don't want to get rejected by the simple moving averages. We already talked about it. But also, we don't want us to get below the 84K low right here. So if we get a very weak bounce, let's say we get a bounce, but we don't even get to 100K. And instead, we stop, let's say at 97K, 96K. If this happens and it rolls over like this, and you zoom out a bit, that's going to look pretty bad. Because comparing this bounce with this low and this high, that will be much weaker of a bounce than all previous bounces. Okay, so ask any chart analyst, then they would tell you, okay, if we get a bounce from 80K only to 97K, whereas the last bounce was 76K to 125K, then chances are the next low should break this higher low here, because that would look like a very weak bounce. So that's why, from a TA perspective, this next bounce is also very crucial. I think I would like to see at least 102K, let's say in between this range, for us to clear both the 20-week and the 50-week SMA. If we can clear both of those, even for 1 week, I'll be very happy. I'll be happy enough to say, okay, we have a good chance to just chop and for the bear market to not go much lower. But if we don't clear both of these SMAs, I will be pretty scared. Let's say the SMAs are at 100K, but we roll over like this, then I don't want to see that happen. And I would be pretty scared for us to retest the low 80s and potentially break that. And if that breaks, potentially we can have much lower. Because if 80K breaks, I mean, 76K is just in range, and that's not going to look good. So not only is this next bounce going to tell us whether we can reclaim the uptrend, it'll also tell us how strong the next bounce will be and whether this low here can even hold. Just in summary, I think right now is a really good time to be buying Bitcoin. As we are very close to the 75K mark in the previous higher low, the fundamentals are all leaning towards a Bitcoin recovery quite soon, with gold, S&P, M2 money supply all going past new all-time highs. What's it called? The cycles are also telling us that we should at least revisit the 20-week and the 50-week simple moving average at the 100K mark. So at least we can bet on a bounce trade from 88K to 101, 102K, and then wait until what happens then to see the price action. So that's why I'm heavily positioned in Bitcoin right now. And I'm also strongly watching the next bounce to see how strong it is before making the next move of whether I want to hold Bitcoin more because the bounce is very strong, or if the bounce is very weak, then maybe I want to trim some of my Bitcoin positions. But so far, no reason to be scared. I'm holding Bitcoin I do believe a bounce is coming. Number 2, follow me on X at VirtualBacon0x, where I drop day-to-day alpha when I'm doing these trades, covering the uniswap trade, covering the Zora trade that we have already closed, etc. Day-to-day text style. Check me out on X. Okay, that's it. Thank you guys for watching, and I will see you on the next live stream.